Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free video report for Tuesday, December 1st, 2015. Hope you guys had a fantastic Thanksgiving and a couple days off. So the markets ended the November on a sour note, started December on a very bullish note. A lot of whipsaw going on, and what we're going to try to do in this video is just give you some clues as far as what we see going on. So let's get started. At Sentiment Timing, we believe that human beings in the markets are irrational, and there's always an irrational element at work, and that is exactly what creates market opportunities. Now, we try to figure out these irrational elements at work through Woody Dorsey's proprietary sentiment database, as well as his technical timing profiles. And with that, we combine them with just a regular technical analysis to try to figure out where things could be playing out. So really the goal with our service, it's not a trading service. It's really help you make better trading decisions. And whether you're a day trader or a swing trader, the key to making money is putting the odds on your side. And there's nobody that's going to be 100% correct, but the markets can be predicted, especially on the short term, with a high degree of accuracy. Now, there's a code that it follows. This is something that Woody Dorsey has developed, and it's always changing. And he's the master of this code, and he's the first one to let everybody know whether things are changing or not. And really the goal is, is it safe to be buying? Should you be selling, or just keeping a neutral basis? And that's really what I put a little model together that I'm going to go over. It's beta testing right now, but it's kind of trying to simplify things. So really the matrix that we use, it's the timing, the market timing, and that's when to expect these reversals in trend, and that is what Woody's timing profiles are. They, there's usually one or two each month, and that's really when we're looking for some type of high or low. Now, again, these dates are not 100% correct all the time, but they're correct a large majority of the time. And even if they're not correct, what it means a lot of times is that, okay, it didn't turn on that particular time date, but it doesn't mean that things are now safe to continue in that current trend. We then match it up with sentiment to see how traders are feeling about the market, the current trend. That old saying, when there's too many people on one side of the boat's going to tip. That's kind of how the whole sentiment model works. And then price is the technical analysis. So basically right now with the sentiment, investor sentiment, say model that is out there with trader psychology, is you're going to get your euphoria. That's when everybody is bullish on the market, and you're going to get your capitulation when everybody doesn't believe the market's ever going to go up. And really the theory to everything is, when everybody is not really believing in the markets, you want to be a buyer. When everybody's in their euphoric stage, you want to be a seller. And especially when they line up with timing profiles. So on a sentiment, Rand, you can see here this is we had very low sentiment. This marked the bottom. We had a very nice rally. We are starting to see some high sentiment, but it's not really doing much to the price. And if you notice, a lot of times you see a few high sentiment readings before actually it kicks into gear. But the low sentiment readings, they usually can get very fast, moves to the upside, and that's what we saw here, to 1%, when we had a pretty massive move on that. I think that was actually might have been the last report that I did, was that we got long right here. So anyway, we have some sentiment readings that are, they're in the bullish area, and which is, it's not bearish for the market. It has to be interpreted, and that's what Woody does. But it's not something that it makes, say, buying safe, maybe keeping a neutral stand. So the model part that I was talking about, and I'm going to go over the regular charts real quick, just to show you what I mean on this. So here you can see we have bearish divergences in place. So we know we have high sentiment readings right here. Here we had very low sentiment readings, and we were very overextended on our momentum, and we were in a bull. It's what I have, the bull bear momentum cross. So we were on a sell signal there, and you can see it triggered a buy signal here. Momentum was starting to, our price oscillator was moving up, and we had a 1% sentiment reading, and we had a very nice rally. So this is when we got a lot of yuck going in the market, where it was crossing up and down, and we were just getting, really nothing going on. But that typically happens during the holidays or a shortened week, so it was expected. Today brought it into a bullish cross again, but the problem is we have bearish divergences in place. So even though it's on a bull cross, we have bearish divergences, and we know that we have some high sentiment. So the little model part that I've put together is that what we're really looking at is it's a short-term sentiment model, and basically if sentiment is very bearish, that would get a +1 because it's bullish for the markets. Timing profiles, are we in a bullish or a bearish timing profile? Technical divergences, bull bear momentum, which I showed you, and then a final score. So if we see a +4 or a -4, it's telling you that, especially if it's a -4, that, you really want to be probably shorting the markets. If it's a +4, you want to be looking to buy the markets. So the way this score works, we know that sentiment is high. So if we go back here, we had a 90%, so that's a -1. Now again, when it was down here, this would have been a +1. So we have timing profiles. You don't know the dates, but we're in a -1 on it. Technical divergences. Remember, if I go back to the 60-minute chart here, we have bearish divergences in place. So that is a -1. But now if we just go to the bull bear momentum, and I'm keeping this very simple, is it on a bullish cross or a bearish cross? And if this green is above the red, then we're on a bullish cross. If the red is above the green, then it's a bearish cross. So this is a +1. So the score, if you add everything up here, is a -2. So it's neutral. It's not a, if anything, if yesterday it was a, it was a -4, but obviously with the price turning, that brought it a little bit back to neutral. But it's not something that you really want to be jumping into this market and buying, because you don't want to get overly aggressive on the bullish side if it's a -2. So if really what the bulls have to do is maintain above this 2103, and then from there they got a shot of getting up to this the 2110 area and eventually 2116. The bears need to get it back below the 2080. If they do that, then there's a good shot we're heading down to the 2071, possibly even down to the 2069 area. So the bulls have control as far as price, and that was mainly due to today. And we know if they continue higher, the next stop's going to be 2109, and then we have the next stop at 2116. But that's also going on bearish divergences. So you want to be a little bit careful. As long as they can maintain above the 2080, they have control of the tape, but most likely this will turn into a bearish cross as well. So as far as seasonality, we are, December's typically a bullish, month, but there's just some clues out there to saying just don't be overly aggressive on the bullish side, because there could be some volatility that can hit anytime. So with that, that's tonight's video. Sorry it's a little bit long. If you are interested, we are actually doing a different promotion tonight. You'll see it at the bottom of the email I sent. Again, you get a free membership to Markets Path for anybody, as long as you remain a member of Sentiment Timing. Everything is automated on that. And until next week, good luck trading and have a great night.